So the troubled Chinese property company Evergrande has avoided defaulting on an overdue payment by just a whisker. Evergrande wired $83.5 million on Friday to a Citigroup account for a missed bond payment that had been due September the 23rd. That's according to the Securities Times. Evergrande's struggle to reduce its more than $300 billion of debt has prompted fears of default might triggering a financial crisis. The news lifted Evergrande shares in Hong Kong. Clearly, that's something to discuss for one with Clifford Coonan, who is in the studio here with me. Hi, Clifford. And Christy Platzen, who joins us on the Frankfurt Stock Exchange. Christy, and I would actually like to start with you because we had this talk yesterday about share price plummeting. A different picture today. How did the surprise payment go down on international financial markets?
Well, Monica, investors were certainly happy to hear this news out of China, at least when it comes to European stocks. We saw them climbing on the news. There's still a lot of debate about what a collapse of this company would mean, whether it would take the Chinese economy down with it and have major spillover into international markets. So by making this initial payment, that shows that things still seem to be under control for now. So between this and also some strong corporate earnings performances that we've seen this week, investors seem to be in quite a good mood today here in Europe. You know, there's a lot for markets to worry about right now, along with Evergrande. We're also still dealing with supply chain issues, fears of inflation, and let's not forget that we're still in the middle of a pandemic as well. But all that being said, European stocks are near a 6-week high today, and that certainly has something to do with this news out of China today.
Yeah, surprising news and good news, apparently. How good? That is something I would like to know from Clifford. Could it be that we've underestimated Evergrande's will to survive?
Well, I think what this will do is it'll buy Evergrande some time, but it's like a sticking plaster on a gaping wound. It's really a very, very small amount of money. I think it has a will to survive, and Xu Jiayin, the chief executive, the founder and chief executive of Evergrande, is a survivor. He's been in this. He's not okay. It hasn't been as bad as this, but he's been here before, and he's managed to pull things around. I can't see him pulling things around, though. I think this is. There's clearly something else going on here. It's a much bigger problem. It's kind of a systemic problem, which Evergrande is just like a symbol of, or an indication of, in a way, of a much deeper malaise in the economy. So I think it definitely has a will to survive, and it's bought itself a little bit of time. But I don't think it signifies anything that's going to be any massive change in the direction it's headed.
OK, so you still believe that eventually the direction is it will collapse sooner or later. But what does all of this, and the latest development in particular now, tell us about the state of the real estate market in China?
Well, I think it shows us that China has a debt problem, and this is going to affect all of us eventually. Obviously, it's going to be a domestic issue, and that the real estate sector is in a mess. So basically, with the combination of all these things, they're all connected. It's a little bit like Christy was saying about, you know, all the different factors at work in the market at the moment. You've got the similar thing happening in China. You've got a lot of things going on. You know, house prices are falling, industrial production is prices are rising, production is falling. There's a lot of different things for the government to contend with. And there's one other factor that's very important, which is that there's a key political meeting coming up next month at which Xi Jinping, the Chinese leader, will want to cement his position and possibly lay the groundwork to have another 5 years in power, which is unprecedented. So that's a very important political issue, which means that the government is going to try everything to make sure that nothing happens to the economy in the medium term anyway. So there's a lot of these different factors going on at the moment, and I think none of this is going to help, given the fact that the real estate sector really is in a terrible state.
They certainly have their work cut out for them there. Clifford Coonan, as always, thank you so much. And of course, Christy Platzen in Frankfurt, thank you to you as well. And from my side already, have a nice weekend.